Now I want to be taking a look at Dogecoin because last week in the crypto group, in the Discord group, we have actually shared a chart about it and it got a big move of 5 to 10% in the direction we wanted to. So what is next for Dogecoin? What can we expect on the higher time frame? What are your possible targets, your possible places to look at entries? We're going to be looking at that right now. When we analyze a crypto pair, we want to start off high time frame. We want to sketch in the bias, we want to sketch in the order flow of the higher time frame, and then we'll start working our way down towards lower time frames. I would suggest everyone analyzing this way as well, so it doesn't get confusing. Okay, we are on the weekly time frame right now, but what I do have to say about it is this pullback brought you all the way up to new highs on the weekly time frame. So no matter what happened in between these 2 points, our expected order flow was still that higher low for a new higher high. So that's interesting to see, right? Even with such a big correction, our order flow was still bullish as long as the people that have stepped in here decided to defend their orders and push price up once again, which we did. So let's draw it in. Then we move sideways for a bit, which is what I call an accumulation. Unfortunately, we did not take out this low, but that just means we do not need this low for an order to move towards the upside. We took extreme liquidity, enough positions filled for the market makers to start pushing price up, all right? So let's just start continuing our market structure. Higher low, higher high, higher low, higher high. What is your order flow? Your order flow is bullish. You can expect on the higher time frame another higher low for another higher high. This was the part that caused the big pump. I don't think we've actually tested it, did we? Yes, sir, we tested it. And while hopping into this demand, we've also created the well-known 3-tap bottom. Absolutely amazing indications that market makers had been filling up orders down here to then start pushing price up. So our order flow on the weekly time frame is up. While the chart looks as big as this, because we have just acknowledged this part right here, we can leave this all behind. This is analyzed. We do not need to take a look at that anymore. Only thing we need to know is everything that's going on between this low and this high. Our order flow is to protect this low and break this high. That's the information you need at the time. This is interesting because this supply here not actually makes it a bit easier to analyze. You know, when I start a analyzing video or a stream, I don't prepare things. I just straight away jump into the charts. I draw in what I see. I come to conclusions at the time, not pre-planned, so it's all out of the box. This is definitely market makers selling their positions, right? Taking extreme liquidity here, moving down. Really strong point. So market makers were still involved right here, excuse me, into pushing price down. This was the last pullback that brought you to completely new lows. So that will be my refined supply. Your big supply is this move, because this whole move you reversed and never tested back. But when you refine it, it's this right here. It's also in the supply and demand free course into our Discord. So this part is relevant to test back because market makers were involved right here into pushing price down. And this is the bit that they have got that expansion and aggression towards the downside to. So let's zoom in even more. That makes this also a really good liquidity point because we've never tested this back. You have to think of it this way. If we're getting reaction, let me make it a box. If we're getting reaction from this supply right here, it's way bigger, but leave it at this for now. And you're testing that supply and people are shorting from it. They're shorting from it. Where is the sea of liquidity? Well, the sea of liquidity, your buy side liquidity, is right here. This is the supply that brought you to new lows all the way. That's where we're rejecting from. That's where price got to push twice towards the downside. So where's that C liquidity is going to be? Right here. What makes it interesting for the market makers to test back? This right here. Sweep all of this liquidity, fill up their own orders, and then push price into the desired direction, which I think the time right now is down. We have grabbed enough liquidity on the highs to at least get a correction towards the downside, either inside demand or grab liquidity up on the lows. Either two. So right now, it's also for me, the momentum is down until proven otherwise. I think we have grabbed enough liquidity on the highs so we can start moving towards our lows. So we can start trading this local momentum towards the downside until it's proven otherwise, right? Then we don't anymore. But right now, that's my story, that's my bias. So I would definitely not be looking at longs on Doge right now, because that just looks bearish to me. Even though our higher time frame order flow is upright, this just doesn't look ready to me to explode. Unless I'm wrong, and we're gonna start squeeze up. That is also an option. But right now, price action looks like it needs a correction, so that's what I'm gonna be trading. And maybe after taking out all of this liquidity, our goal is reached. This schematic was just to test this demand here, grabbing all of this liquidity below the lows and then getting your expansion up. Could be the case. We'll have that scenario drawn in, which we have. So, only thing we have to do now is take a look at this local picture. Where are the opportunities for our shorts? I'm gonna remove this. And it's also no coincidence that we're testing this all liquidity right here, okay? It's not. So what happens when the market gets such a massive expansion to the upside? It's gonna exhaust, of course. We do not have infinite fuel to keep moving upwards, so we need to start correcting. And as soon as we're gonna see something like this pullback brought you to new highs. We actually tested a supply here as well, so extra confluence to not look for longs but to look for shorts. But this pullback is what brought you to new highs. That's what you broke with a lot of aggression. So this is also where sellers stepped in and pushed price down. So the question is, when price comes back there, the sellers that stepped in here to provide our order flow to switch from bullish to bearish, are they going to protect their positions and push price down again? That's when we're going to use this riddle here once again. The same thing we did here, we want to see here, and if we do that, continuation towards the downside is confirmed. Well, what we actually did is we created a range. If you know range trading, in this part we are actually trending up. You can also draw the range. I would prefer it actually this way. From low to high, where you touch the midpoint, our range is confirmed. So this would be my range. We have range high, range low, deviation 1, and tap number 3 into our extreme supply, right? Extreme liquidity even. With this big supply, I'm gonna remove it right now because we actually have a refined method. There we go. You can see it works. This is all explained in the free supply and demand video that can be found in the Discord. So I'm gonna shorten this in. That's your bigger supply. But this is really the last pullback that sellers push towards new lows. So when we come back there, let's see if we can continue that move. So we have this range. There we go. This is already the model, right? The model I always talk about, the model I always show. Range low, range high, deviation 1. Either this has to go above the high one more time and reverse, or it has to grab extreme liquidity or touch extreme supply to start rotating down. Well, this is literally this is such a great chart. Actually, there's such a great short. Your trend is up until proven otherwise, but then you start to break it, switching your order flow with this liquidity schematic on the higher time frame, with this order flow in combination as well. It's starting to look really amazing to short, right? We're combining so many confluences here. And so many things are aligning when we're taking that trade. So we really have confidence in this, that we're gonna move down. This is where we broke structure, change of character, our momentum switch. This had to bring us up. We failed doing so. That means sellers stepped in here to push price down. This is your bigger supply, and you have your refined supply. Most of the time it tested refined supply, and this was actually also your play invalidation point, of course above the thing that took out all the liquidity and caused the big move down. Do not want to put the stop loss here because you can easily take it out. And your technical target being the range low, which is already a 3.6 RR. But of course, because of the higher time frame, this is gonna look unrealistic, but these things are realistic and we have hit it before. Your technical target of a range like this is just major liquidity. We've grabbed major liquidity on the highs, tested something major on the highs as well. So I think we can expect that we're going to do the same on the lows here. So I would target this demand, coming up with the 20 to 22 risk to reward here. So to get the conclusion on Doge, it's down until proven otherwise, and we just want to continue trading this while it's standing. Even though this trend is up as well, if we never get that internal rotation towards the highs again, we're just gonna keep on moving down to any liquidity we need. So those are my plans on Doge.